Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend Podcast. Today is Friday, February 27th, 2026. S&P 500 currently sitting at 6908. I'm David Zarling, and I'm here with Ian McMillan. How was your field trip last week?
You're that choked up over the pre-market action. It's early today. I feel like I just rolled out of bed.
Yeah, we're just gonna roll with it. Let the people know we're imperfect. It's all good. You had a good field trip last week?
Planetarium. I mean, it doesn't get any better than a planetarium.
Yeah.
Learn about planets with first graders.
Yeah. Are there any new planets that we should be aware of, or planets that they're getting rid of?
No, I learned that there's like a lot of dwarf planets.
Dwarf planets. Is that a politically correct term?
Not just Pluto.
Okay. I didn't know if dwarf planets is a politically correct term, but
I think it's got to be, yeah. That's what the scientists say.
Pluto was always controversial in my day back in school. It was a planet. It wasn't a planet. What is it now?
I don't think it is a planet. I don't know.
Well, I'm glad you got to do that with your son. That's pretty cool. And not to get too sidetracked, I figured I'd just ask how you're doing, because this would be the about 8th podcast episode with S&P basically in the same place as it was 8 podcast episodes ago.
Yeah. Groundhog's Day.
Yeah. Punxsutawney Phil got up, saw his shadow, and the market moved sideways in a 2% range. Meanwhile, as we've covered ad nauseum, stocks underneath the surface have had a wide range of outcomes, opposite of a 2% range. Like, Ian, if I had told you that these stocks are this amount below all-time highs, so Microsoft down 30%, Palo Alto down 36%, CrowdStrike down 38%, Palantir down 38%, AppLovin down 50%, Salesforce down 52%, Oracle down 60%, and Adobe down 65%. Would you have guessed that S&P is sitting at just 2% under all-time highs?
Pretty fascinating.
I don't think
there's probably a lot of, I guess there's a lot of stuff out there doing well.
Yeah, there is, right? We've talked about 2 episodes that greater than 60% of the stocks inside the S&P 500 are doing better than S&P 500 itself.
Well, what percentage?
About 66%.
It's pretty solid.
I think it's just different areas doing well, while megs do not, and software do not.
It's true.
What do you think about this consolidation between 6,800 and 7,000? You have any premonitions, or
I don't. I'm over it.
You're over it?
I'm over it.
I would think from compression comes expansion. The problem becomes which direction.
Yeah. Kind of getting into it's taking a little too long.
Okay.
So we'll see.
Too tight, too long. Is this actually distribution? I know, if you look at the S&P 500 using futures, we're right at the point of control from the tariff tantrum lows. We're now sitting almost close to negative year to date.
It's pathetic.
Yeah. Get its act together. We had, what's that?
Said I've done my part.
Yeah.
I'm tired. It's just like everything else. 50% of people pulling all the weight.
That's right. You're tired. You're tired buying all the stocks. And we're below the zero line. So negative year to date for the S&P. But, you look across year to date performance, and there are sectors doing very well. Your worst sectors year to date are communication services, discretionary, tech, and financials.
I say financials has to be on there. Financials is terrible.
Meanwhile, on the flip side, you've got energy, materials, staples, industrials, utilities, real estate, healthcare, barely positive. And I wonder, as a technician, and I put this in our show notes, sector rotation and bull bear cycles.
Mm-hmm.
You think there's any credence to the fact that the best performing sectors year to date, basic materials, energy, and staples, while technology and cyclicals are well off, that's just bull market top behavior?
Could be. I guess if we don't get through 7,000, it is.
So simple math for Ian. I like it. And I think what's interesting is the sentiment is so negative already.
You think so?
I don't know. I mean,
we don't really have to worry about a bear market till 2028. That's what I learned this week.
oh, really? Oh,
So we're good.
oh, is that the research paper thing?
Yeah.
Yeah, I love how everybody's attributing that to what
So why are we fretting?
said we're going up till 2028.
Yeah,
Down.
the Substack guy said we have at least probably 18, 20 more months, and then everyone dies. I guess that was dark. No one's gonna die.
I appreciate that. The
But
Substack guy, it's a good way to put it.
oh my gosh.
Well, and it's really, everybody wants to mirror. What I've been disappointed in with some of the quote unquote experts out there, or people that should know better, is really marrying the current narrative to current price. So let's play this out. If we get a normal midterm year correction from this point, let's say we get 10-12% correction. Can you imagine how noisy it's going to get from the doomsdayers about AI?
Oh my gosh.
It's going to get crazy.
A 10% correction takes us to 6,300, 6,330.
Yeah.
12 would take you, essentially back to the February highs from last year, like 61.50.
Yeah. Which,
oh man, maybe
low 200-day wouldn't feel good. The VWAPs from the prior highs in February of 25 is currently at 64.50. The VWAP from the tariff tantrum low is currently at 63.15, and then you brought up the 61.50 prior high. I think the noise would just get. The hedging is already pretty large, and you've got the name exposure dropping to below 75, which is the lowest since 2025, and the AAII bears outnumber bulls on that survey. I don't know. I just think with this much shorting and negative sentiment, that if we get that type of flush, like an 8 to 12% move, it's just going to be super negative narrative, because it's already the sentiment already seems kind of skewed. We'll have to see.
Yeah, a lot of teeth gnashing. Maybe that's just crap. Maybe that's just crypto.
Yeah, what do you think about crypto? That was another story this week, is that Jane Street was manipulating.
Oh no.
Bitcoin.
No.
Allegedly.
We're not trying to get sued.
Allegedly.
Yeah, I've seen they're quite upset. But if you used a price chart, wouldn't matter what the story was, right?
Yes.
You could have just sold below 108. You wouldn't be bag holding at 66. Just saying.
No, that's why we're technicians. That's why we study price. Okay, let's talk about Nvidia, largest component of the S&P 500, one of the largest stocks in the world, market cap wise. Earnings this week. Apparently they had blowout, just record earnings. Stock down 5%.
Just like Palantir.
Right. That ain't right.
Yeah, whenever Palantir was. That was early. I guess that was early February.
Yeah, February 2nd. But to your point, Palantir since February 2nd is
yeah, it's terrible. They
down.
gapped it and then sold it off. Pretty
down.
harshly.
Yeah, down 10%. But that's not right, Ian. They have record earnings. Price has to go up.
There's companies with no earnings up 500%.
Right. And that's where clients, listeners need to remember the market is a weighing machine. It's looking out, 6 to 24 months into the future, not today. Like the pricing in of blowout earnings was already happening prior to this week for Nvidia. And I think it's a little bit problematic that Nvidia can't return to leadership. I mean, potentially with an opening gap here, minus 1.5%. We'll see. Maybe they'll recover that today. What about things that are working? What are you seeing out there that's doing okay?
Energy.
Yep. Best performing sector year to date in the U.S.
Wow. Yeah, I could see that.
What else?
I guess industrials.
Yep.
Holding up pretty well. I mean, it's been a pretty strong 3 months for industrials though. So we'll see if that can keep going at the same pace. Might need to take a break. That's what I keep thinking we're gonna get. Not that you're supposed to plan out what the market is gonna do. But early morning shower thoughts, getting ready for the day. I feel like we were gonna get a rotation back to mega caps and growth for a little bit, and that's what was going to get us out of this consolidation, but it does not seem to be the case so far.
The early morning shower thoughts, and what you're talking about there is that thinking that industrials would pause, that we get a return to
because small caps have kind of chilled out. Financials are terrible. Like I said, industrials have had a nice move. I think that the chances of that move continuing at the same pace over the short term kind of slim. I don't know. Dollar's not really breaking down, so I thought maybe emerging markets might take. I just thought there was a lot lining up to go back to growth, but
no, I think that's fair, and I think Nvidia was a shot across the bow that might not be happening. Because the beauty of technical analysis, right? This is a podcast about looking at markets through the lens of technical analysis. You look at a chart of XLK versus XLI, so tech versus industrials, it needs to get itself together. Important levels coming up here in that relationship.
Yeah, look at that.
What about materials, mining stocks?
Yeah, I'm turning around a little bit. Those materials have held up pretty well. Same look as industrials.
Yeah, we
consolidating for the last couple weeks, 3 weeks.
Well, we got Freeport-McMoRan, a bellwether stock, going out to 18-year all-time highs.
Yeah, probably not terrible.
You got gold miners, GDX versus S&P, confirming a breakout of a 12-year base. Silver miners versus S&P.
Freeport's copper, right? It's copper mining.
Yep.
Yeah.
Copper miners doing well, gold miners doing well, silver miners versus the S&P at levels we haven't seen in 9 years. Materials and industrials, not too shabby. Can't complain.
You do it now, though?
What's that?
If you didn't own any industrials and materials, would you buy them right now?
Ooh, miners are... I'll start with miners.
I'm asking for your financial advice.
Not financial advice. I think the GDX S&P chart is about as clean as you can get.
But what about XLB and XLI?
Okay, XLB on an absolute basis.
Yeah, miners are good. They got 2 bullish engulfing candles this week. That's pretty solid clue, you would think.
Well, XLB is holding up really well in some of this red tape this week. Now, whether you could enter it here on an absolute basis, you'd have to have some pretty tight stops. Again, not advice. Industrials, same situation, has moved higher, could consolidate here, but to your point, a little harder entry on an absolute basis. And industrials are up against a relative level that's been important for a while. Materials also.
Materials. Semis getting hit this week. Well, I guess that's more of an Nvidia thing. We'll see, man. Maybe the run in semis is over.
That would be problematic because that has been the leader.
Hmm.
How about small caps and microcaps?
Yeah, microcaps held up well, I feel like. Well, they were holding up kind of I would buy microcaps here.
Yeah. Microcaps using IWC.
Yeah, you could buy that.
Really clean breakout above 157. Consolidation. Could own it above 165 again. Not advice. And so that's the flip side of everything is we have sector leadership that smells of bull market top behavior with energy and materials, utilities, things like that leading. Tech, not so much. But on the flip side, microcaps are outperforming small caps, like IWC versus IWM leading.
Not bad.
That's not bad. And it speaks to equal weight S&P and the Russell 1000 doing all right. I mean, even transport's doing pretty good.
What do you think about that?
It's good. Just different areas of the market leading. I mean, for how long it had been tech and growth.
Got to get it above. And Caterpillar looks pretty good. We'll see if it breaks. I mean, we'll see after today.
It's just going to be really interesting if the Magnificent Seven can't get above using mags, can't get above 63.
It's going to be terrible.
That's a
imagine having to cancel Christmas in February. Because the market's so bad. You got to sit your kids down. They got 10 months to get over it, though.
That is true. That's a good point.
There's a lot of good stuff happening under the surface. Still a lot of good stuff overseas.
Yeah, talk to us about international.
Talk to you about international. Can I use like an international accent? No, we won't do that.
Oh, I wouldn't mind.
We'd get reported. We would definitely get reported. Yeah, it's good. Still don't own South Korea. I love to talk about it every day, though. And my coworkers love to look at it. Don't own it. It's great.
Well, South Korea is one of those, and when we're talking about South Korea, we mean Samsung. It's big. I was going to say it's big. And are we, you can recognize what it is. And sometimes we've all been there. You stand in the box and the fastball comes down the pipe. And for whatever reason, and I'm not saying South Korea was a fastball. I'm just saying that they're, if you're true to yourself and you're being honest about being involved in markets, there are some pitches that you miss. And once it's in the catcher's glove, it doesn't make sense to swing. I mean, South Korea's
gone, dude.
It's already moved. We got to move on to the next pitch. But I hear you. I mean, I find it fascinating that Italy, Greece, Spain, you brought up Ireland this week.
Mexico has held up pretty well.
Mexico's held up, even with all the drama going on there.
Yeah, look at Italy, new relative highs. I mean, if you look at VGK, Europe, yeah, we're back into a relative 200-day. It's good. I mean, it's not. So does that mean the DAX looks pretty good? Yeah, it does.
Well, the DAX being highly correlated. I mean, the Nikkei holding up. And then you have, Poland, Greece, Spain, Italy, Ireland. You already brought up South Korea. Brazil up strong year to date.
Didn't buy Spain. Didn't buy Spain in mid-December on the relative breakout. Here I am, just kicking myself.
Well, not all internationals the same. I mean, go back to, you look at EEM on a relative basis, great. Emerging markets minus China, like EMXC, not so much. Or even emerging market tech, terrible.
China, yeah, China's a tough one. China had a rough day yesterday. Well, if you look at FXI, I guess Asher, the A shares have held up better, but I don't know what happened in FXI. It's definitely a lot worse. I assume GXC looks the same. Not as bad, kind of in between the other two. Maybe it's consolidating. Maybe we're ripping higher.
Well, if China ever decides to get involved, emerging markets is just going to go bananas. But it's strength out of international. You got microcaps doing well. Again, it's just dispersion, differentiation, bifurcation, split market, however you want to describe this.
Bitcoin does. Bitcoin sucks. Bitcoin, I bet, kind of looks like it wants to go lower.
Well, wouldn't
It's
that be
also been sideways for, I guess, a month, 3 weeks. But if we cannot get back above 72, 73,000, then.
And if it does go lower, what's the story going to be? Because I thought Jane Street was the one that was keeping it down. What about rates?
Rates.
Think we got mortgages under 6%, Ian?
That'd be refinancing.
I don't know.
So long-term rates, I mean, you're below 200-day. Although we've pretty flat. So I don't know how much that means. Yeah. Lower rates.
Treasuries moving higher, leading AGG, right? Treasuries are a huge part of the aggregate bond complex, U.S. Treasuries.
Should I be buying treasuries?
If you got a fixed income sleeve, maybe.
Nice big gap today. Still pretty rough look against equities.
Agreed.
So that's hard. What about junk? Are they buying that stuff?
Yeah, junk versus IEF is a little bit of a problem. So junk bonds versus intermediate bonds. I will say that that's screaming a little bit risk off. And triple C credit spreads. You know, we've continued to make higher lows in that relationship, and we're back to levels we haven't seen since November. So you're seeing, you know, we've got all the credit stress coming out of private credit that's related to software. You know, you look at the private credit universe, and a majority of that's software private credit. Like global private credit is around 3 trillion. Software private credit is about 20% of that. So does it, you know, is there something there in the backdrop regarding credit issues with software? I mean, software stocks have been greatly discounted using IGV. We've covered that ad nauseum.
Terrible.
We have an elevated VIX. I think you bring it first and foremost, the junk IEF thing is extremely notable. I mean, it needs to hold.
I don't care for that. I don't. It's weird.
Reeks of some liquidity issues, and we know that the market engine operates off of oil liquidity. You can have all these other things do well and still have some problems underneath the surface. So there's definitely, if you look at the scale of weight of evidence, there's things for both sides. You know, if we're breaking 7,000 and industrials and energy and materials continue to lead, probably has to happen with a backdrop of mega cap and tech at least stabilizing. But if those accelerate to the downside, it's going to be really hard. And you consider what the credit piece in the backdrop. Lots of things to consider. 6,800, let's just say it this way, 6,800 on the S&P needs to hold.
Has to. Or I'm going to be getting a gig job. I'm going to be doing Uber Eats.
Uber Eats. Yeah, what are all the ones? Uber Eats, DoorDash.
I think that's it as far as I know.
Yeah. I've never done it. I've never tried that.
You just got to put it on your Klarna and then don't pay it.
Is that a big?
Yeah.
That's crazy.
If you break your quarter pounder into 4 monthly installments, it's only like, well, after interest, you're probably doubling it. It's probably about $22. Which, well, what's so crazy is DoorDash is already expensive, and then you get the interest from, actually, I don't know. I assume the interest kicks in right away on something like that. If I was running the company, the interest would be kicking in right away. So yeah, I mean, you're paying $35, but if you just look at it in the monthly installments, it's like $9 a month. That's not bad, Dave.
Yeah. Just do it. Why wait when you can have what you want right now?
Next paycheck's problem. Yeah, why wait?
Crazy. And is that indicative of a K economy? Are people doing that? Do you think people are doing DoorDash and using Klarna?
Do I think it? Yeah. I read the report.
It's interesting.
But DoorDash had their most sales ever last quarter. Can you believe that?
Fascinating. Well, and that, you know, from a market perspective, what's interesting is just how weak consumer discretionary is.
It is. Yeah. I do think that I definitely believe in the K economy type stuff. Yeah, XLY has not been pretty bad since early 2025. Well, I guess it's been bad since 2021.
So mixed bag out there. Anything else you want to highlight for our listeners? Any more shower thoughts?
Yeah, I think precious metals are going to take another leg up. They could. We need a dollar to get weaker. As long as the dollar stays under 98, stays under the 200-day. Not a smooth trender, though. Not a smooth trending asset over the short term. But we are in a downtrend. Longer term.
For the dollar?
Dollar, yeah.
Yeah.
Just got to get through 96. And a whole new world opens up. I hope it's a good one.
Want it to be great. Well, at this time, I want to highlight the support of this podcast, the Adaptive Select ETF, which is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. So we'll see, Ian. Next time we're recording, will we still be within 6,800 and 7,000 on the S&P? Will we continue to see leadership out of materials and industrials and energy? Will we see the Magnificent Seven, large cap, mega cap growth and tech stabilize? Or will we be having a flush on our hands and below 6,800? That's really what it comes down to.
Stay tuned.
Stay tuned. Well, I appreciate you doing this with me again this week.
It's good to be back.
And we'll be back next week. Please give us a high ranking on your platform of choice and share it. You know, if you want to, we do post these to X. If you want to repost, that'd be helpful. Share it with your friends. It gets the word out and is a compliment to us. Thanks for listening.
Have a great weekend, everyone.